Good morning or good afternoon, depending on where you are in the world. We are going to cover what's happening in the markets this week and talk a little bit about what happened last week. If you do have any questions for me, as always, feel free to drop them in the chat, and then we will try to cover them by the end of the presentation. Okay, good. What happened last week, really? Well, we saw further dollar strength, and the reason for this is quite straightforward. The dollar was riding on the wave of the non-farm payrolls we saw on October 4th. Do you guys remember? Most of the data has been really bad, and suddenly we have a very good non-farm payrolls report, and everybody's very excited. And instead of be betting on rate cuts of 25 basis points, sorry, 50 basis points, everything has gone back now with people betting on small cuts of 25 basis points each time. But not everything was great last week. We also saw that initial jobless claims did a dramatic U-turn, and it reached a fresh 2024 high of 258,000 people applying for jobless claims. And that's something they can apply when they're losing their jobs, so they can get these benefits. Now, it seems to be related mostly to Storm Helen. That's the storm that ravaged places like Florida 2 weeks before the latest hurricane, which was Milton. And there was also a strike at Boeing. Now, as for now, people think that this is going to be short-term in nature, but we still need to keep an eye on it because the jobless claims did a very good job when we saw the non-farm payrolls weakening and predicting. Now, the jobless claims have actually improved dramatically over recent weeks, obviously being very, very bullish for the dollar. But now again, we have this very weak number. If you just look up the chart, you're going to be seeing how big of a difference just 1 week makes. But people didn't necessarily care about that. They were still saying, all right, this is short-term in nature. The Fed is going to cut, but not by as much. And then they had another reason for anticipating the same, and it's the U.S. inflation. So U.S. inflation came in at 2.4% annually. That's a change from the inflation prices from last year to this year. And that was slightly higher than the 2.3 anticipated, and still down by from 2.5. Now, despite all this data, the S&P 500 managed to reach a new all-time high. This week, we do have some trading events, but there's nothing really that important until Thursday when we have the ECB rate meeting. That's the big event that's going to shock the market, okay? We do have some localized data points that you can trade though. So in the early morning, you have UK unemployment rate that could influence GBP USD and GBP yen. You have Canadian inflation figures on the same day in the afternoon, sorry. And at night, you have New Zealand Consumer Price Index. So you do have some interesting data as well, UK CPI, but these again are much more localized. So the market could easily maybe trigger a trend, or you can easily get maybe like 20, well, in this case here, maybe like 50, 60 pip on these reports. So there's definitely things to trade, but it's not like one big event is gonna stop you out or influence your positions. That's gonna happen later in the week with the ECB rate meeting. That will have a direct impact on Euro USD and European stock indices and things like Euro Yen as well. And then we finish the week with retail sales, and if you're into stocks, you have Netflix earnings as well. So quite a relatively quiet week. I think it's going to be more technical until we reach the ECB rate meeting. So how about the charts then? Unfortunately, it's been it's a bit dull again for the Euro USD from a pure trading perspective. You might remember we're sort of stuck between sort of 109.50 and 106 forever in 2024, and then we had that breach, and we talked about it here in this presentation, and we said, well, if push to the upside, we can go much higher, maybe all the way as 115, because we had a line that went from here, you see, plus you had a line that went here. So you got like several breakup points here. Now, looking at this today, we're stuck in this big wedge type of pattern. It's not an easy one to trade, and I will be very cautious. But as long as trade below 140. I think it might go up, but then slowly down to 109 and maybe down to 108, where this trend line meets. Now, with the election coming up in the US in less than a month's time, do anticipate the market to be a bit quieter than usual. But yeah, stuck in these levels, and then we'll see what happens. How about crude oil prices? So crude oil prices, I had a very bearish view that worked really good for a couple of days to the downside, and then up, and then one could short again, because we triggered some major levels. But with the increased tensions in the Middle East, the prices went up. As well, you had a large monetary stimulus package from the Chinese government. Now people are looking for fiscal news on fiscal stimulus in China. The market went up. But the number one reason is, of course, the tensions in the Middle East. And the latest is that Israel is looking to have a retaliation attack against Iran, potentially targeting crude oil production facilities and nuclear power plants, which, of course, if that would happen, do anticipate crude oil prices to push substantially higher. A break to 80.93 could lift the price all the way up to 93.59. So that's something definitely you want to keep an eye on, a break here. Until that happens, price might go up, but ultimately drift slightly lower, I would argue. But definitely something to keep an eye on. Because Iran is one of the biggest producers of oil. And, you know, if their production would be disrupted, it's going to create quite a lot of havoc. And as well, if they really wanted to, they can just squeeze because the exports of oil from places like Saudi Arabia, for example, because if you look up on the geographical map, all those ships go past Iran. So technically, you know, we have seen it in the past where there has been, Iran has boarded different ships. So yeah, there's a real risk that oil prices spike on geopolitical tensions. How about gold prices? So gold prices last week, you know, were under pressure, which makes a lot of sense. People were buying dollars against the euro, buying dollars against the pound dollars against the Aussie dollar. But gold managed to hold up relatively well, but it did obviously breach a couple of levels. But the big picture trend does remain bullish, sorry. And my longer term target of 2,900 still remains in play, and I think we can push higher. Now, if I wasn't in the market, if I wasn't long, I would wait for a dip to 2,626. From that level all the way down to the low, I like the risk reward ratio. The alternative is that maybe we breach here and then maybe on a dip, buying a breakout. And that's it. And that's it for the gold. If we look here, this is the S&P. The S&P 500, when we did the update last week or 2 weeks ago, we said look to buy here. That went well. And we're looking here, I think if we would dip to 5,785, but not below 5,732, I think people are going to be buying, targeting this level here and this level here. Now, for the big picture, the trend will remain bullish as long as trade above the October low. And so even if we break here, it doesn't necessarily change the outlook. The problem is this: if we're trading short term and we're going to put a stop loss here, then the risk to reward ratio becomes poor. And sometimes the market just, you know, it just leaves you behind. It doesn't give you that stronger pullback so you can go long. And that's why I'm working with this thing here, this level here. But just because if this break doesn't necessarily mean that the big picture trend is over, okay? And as a trader, sometimes we need to just accept the risk and be like, okay, you know, I'm gonna take this risk, and then that's it. And that's what we have for you in terms of charts and outlook for this week here at Thinkmarkets. If you do have any questions for me, let's see if you can leave them in the chat. If you're not around now, if you're watching the recording as well, obviously we can come back later during the day. If not, we're gonna wrap things up. All right, so we don't have any questions at the moment, so we're going to wrap things up. If you do have questions throughout the day or throughout the week, you're most welcome to leave them there. And that's it for now. Thanks so much for watching, and we'll see you guys next week, same time. Thank you.